Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, share prices may be up, but the underlying data moves are almost all negative. Firstly, the influential American ISM PMI came in well below expectations. Their factory expansion is slowing, although it is still at a moderate expansion. The slowing is also recorded in the market PMI for the US, and this one has the slip a bit steeper. US car makers reported weak February sales, notable because the weakness was pronounced for SUVs. This trend does not augur well for US manufacturing, and the pressure will be on to cut costs. Meanwhile, the latest consumer sentiment survey shows the bounce back in early February faded sharply in the second half of the month. All up, US first quarter GDP data is pointing to low economic growth, with the corporate tax sugar hit no longer effective. The same sagging in economic pace is being recorded in Canada. Their fourth quarter GDP growth was anemic. In fact, some called it gruesome. Their factory PMI slipped as well. None of this suggests that Canada will continue with its rate hikes. On Thursday, we got the official Chinese PMI survey result, and it wasn't pretty. But over the weekend, we got the private market Caixin China PMI, and that paints a far less worrying picture. This one says operating conditions faced by Chinese manufacturers were broadly stable in February. Encouragingly, both output and total new orders expanded slightly. In Japan, factory production declined at its fastest rate since May 2016 and slipped into a contraction in February. It's been a sharp fall there. Globally, the Bank of International Settlements is reported to be calling for risk weightings to be independently audited in an effort to stop errors and cheating. In Australia, the release of the IMF banking system stress tests point to few risks and a sector well positioned to withstand a severe shock. US Treasury 10-year yield rose at the end of last week to 2.76%. That's an 11 basis points gain in a week. Gold has fallen sharply, down to $1,293 an ounce and a $23 drop since this time on Friday. US oil prices are sharply lower, now just under $56 a barrel, while the Brent benchmark is down to just on $65 a barrel. The Kiwi dollar will start the week at just under 68 US cents, a little change from this time on Saturday. On the cross rates, we're marginally softer at 96.1 Aussie cents against the euro, we're at 59.8 euro cents. That puts the TWI at 72.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.